Hello, Uncle Jim here. I've been on a journey to learn the right way to sell options, and today I want to share with you what I've learned along the way. I think it's going to be well worth your time. I'm also going to share with you how I actually plan my trades. At the very end, I'm going to share with you my weekly planning worksheet and some of the stocks I really like at this time. So stay tuned. I think you're really going to enjoy what I have for you today. Okay, let's jump right into the key advice. First of all, I think one of the biggest pieces of advice I can give you is to really pick good securities. This includes ETFs and stocks. I made some bad choices and they ended up burning me a little bit. One for example, is ARKK. I do have a video. There's several videos related to my experience with ARKK. It went way up real quick in 21 and then it came down just as quick, if not quicker. And I think what I learned from it is it was too volatile. It's something I should probably not have invested in. I still own some, and I'm still selling cover calls on it and doing fairly well with it. But, you know, I'm a buy and hold person. I like dividends as much as I like premium from selling options. I currently earn around 1800 on my accounts, my two brokerages, which I think, well, actually, it's all my accounts, which is just shy of 700,000. But I'm making again like 1,800. My goal is by the end of maybe next year to be making 2,000 a month, or maybe the end of this year I might be able to buy a few more securities and up those dividends. So first of all, like I said, pick the right securities. Look at earnings growth. Look at dividends growth, and be sure they've got a good track record and their future looks bright. Next is, and I'll have a video up above about this, is I stopped doing vertical call credit spreads. I got burned with Microsoft. In a vertical put, not put, a vertical call credit spread is almost like a vertical put credit spread, but it's the opposite. So in a sense, you're selling a call nearer to the money, and then you're buying a call further out. Well, what happened with Microsoft? It just shot through that. I think I had done it for 30 days, and Microsoft had good earnings, and it went up like $30, $40 in a matter of a week or two. May have even been more than that, may have been $50 or $60. So, and on the upside, there's really no protection, so you can really dig yourself a hole. A stock can go way up. I also experienced this with ARKK in a similar way when it was going up. So you have to be really careful with doing vertical call credit spreads. I no longer do them. I only do cover calls, so I have to own the shares before I'll sell calls. That's the only kind of call I sell, and I doubt I'll ever go back to doing vertical call credit spreads. So to me, it's a little bit too risky. Next is I started out with 20 delta on both calls and puts. Now, because of the bear market, I decided to lower that for puts. So I do more of between, usually right around a 15 delta for the puts, maybe even a little lower if I can do it. And I'll usually go a little farther out so that I'm taking less risk. And that's worked out really well for me. Initially, when I was doing the 20 deltas, those are a lot of the options that have been assigned to me. So I think I did some 20 deltas with Intel. They got assigned to me. The 15 deltas I seem to be doing really well with. So lowering that puts and having or the delta on the puts and having two different deltas that I use for calls. I use a 20 delta for calls and I use a 15 delta and maybe even lower for puts. And again, that's made a big difference, and especially during the bear market, because you really don't know how low it's going to go. Let me just jump into that and kind of give my 2 cents related to the bear market. A lot of recessions tend to end in October. I think we may have ended the bear market, but no one can really tell until down the road. But again, between this being a election year and the fact that it's October, there's a good chance that we've hit the bottom. And my guess is we're going to have a slow recovery related to the market, and the bear market doesn't necessarily coincide with a recession. I do think we will probably go into a deeper recession, primarily because of the Fed and these increasing of rates. I talked to a neighbor just yesterday, and he shared he's a real estate attorney, and he shared they've been hit really hard. They're actually looking at layoffs and some other things. So I know the real estate market's getting hit really hard. So it's a real lagging indicator. So what they're doing now, we probably won't know the impact till March or April of next year. And what we're seeing currently is what they did a couple months ago, or maybe as much as 6 months ago. So that's where I think we currently stand. But again, lowering your risk level for puts will protect you on the bottom side. And again, picking good securities you want to own, because anything that has been assigned to me, typically I've been happy to own it and keep it. And again, if you're doing something like a vertical put credit spread, you're protected on the bottom. I've had a couple of instances where something's been assigned to me and then I end up assigning it to someone else and only taking a small loss compared to a significant loss. One example again is Intel. I was able to do that with, I think, 3 contracts. It got assigned to me and then I assigned it to someone else. So next is keep track of earnings. Now, I've had a lot of people criticize me or add comments that, don't let the tax tail wag the dog, but I didn't really pay attention. In 21, I did better than I ever thought. And I ended up having some really good profits. I think between my 2 brokerage accounts, I did like $65,000 in profits, and I did get hit pretty hard with taxes. I ended up paying $7,000 more than I'm typically used to paying. So I decided to dig deeper, and I noticed that with Schwab, you can actually see how you're doing. It's the same thing they export. It's actually on the history page, and you can look at capital gains and where you currently stand. I'll show that at the very end of the video when I share my actual planning worksheet. I'll also share that, where you can actually look for that with Schwab. And my guess is every brokerage is like that. So I made like $65,000 last year. And then this year, I think I'm taking a bit of a loss. I may be right at break even or a small loss. Mainly because this year we're in a bear market, and last year we were kind of in a bull market, a crazy bull market. So, and then I also mentioned here, I somehow copied that twice, lower delta for puts during the bear market. We already discussed that. So the next part is actually managing the trades, and this is the part where I'll actually show you my planning worksheet. And this has been a God saver for me, actually planning these trades and figuring out what I want to do, not just trying to roll them or close them, but also, some that I may want to buy. You can also buy puts after the fact and turn a cash secured put into a vertical put credit spread. You just have to buy the put expiring on the same day. So let's jump into the next part of the video. I'll share with you my planning worksheet, and then I'll share with you how you can see the capital gains in Schwab. So stay tuned. Let's jump into that next part of the video. Now I've opened up my Schwab account and I've gone to the history for my trades, and this is for one of my brokerage accounts. And what I was mentioning earlier, if you want to see how you're doing for the year and what the impact may be on taxes, you can go to this realized gain and loss. And you can see here it's already set up for the previous calendar year. So this is just one of my brokerages, and you can see I did $50,000 in total gain and loss, and it breaks it down by long-term, short-term. Now I actually compared this with what was uploaded in the TurboTax, and it coincided with it. So I wish I had looked at this earlier, but I don't know that I would have changed my plans, because I was happy with earning some good income. So I wasn't overly devastated with paying more taxes this year. But if you look at this current year, so I can go up to year to date, and then I can do search. And you can see I actually, in this brokerage, I took almost an $11,000 loss for the year. So, I don't have the same tax impact this year. Actually, I may be, I believe in the other brokerage, I may be up a little bit in my other brokerage. This brokerage I do most of my trading in, and I've taken a little bit of a bigger loss with it. Now, one thing that I have done since this has occurred, I do have another account that's a IRA rollover, and I do a lot of my trading in it now versus in this account, and I'm able to avoid the taxes that way. So that's also why this is probably, I took those losses earlier in the year, and that's why it really hurt because I had to pay a big tax bill, and it was about, I always file an extension, and the reason I file an extension is I think it's a little bit safer from an audit standpoint, from what I've learned, at least from TurboTax and other things. But I ended up having to pay that extra tax, when the market was at its lowest. So earlier this month, the market was at its lowest, and I had to pay a pretty hefty amount of tax on it. But again, I still agree with the advice is, don't let the dog's tax tail wag the dog. I'm probably saying it wrong, but you get the basic idea. So this is real easy to find. My guess is every brokerage has it because this is what you download when you do your taxes. If you do them yourself with TurboTax, if you have someone doing them for you, they do the same thing. They download them directly from your brokerage. So it makes it really easy. I found, using TurboTax Deluxe, I'm able to do my taxes fairly easily and fairly quickly. So I just wanted to share this. Let's next jump into the actual planning worksheet. Okay, I've opened up my planning worksheet. I actually released this on Monday. I typically release them to my memberships on either Sunday evening or Monday morning. And at the very top, I typically have 4 recommendations. I include the expiration, the security, why I like it, what the estimated premium would be, the delta. I provide quite a bit of details, and I typically do 4 of these each week. And again, I release it either Sunday evening or Monday morning. If you want to know more about my memberships, you can find information below. And as always, please hit that like bell and subscribe. I'm still a small growing channel, and I want to get more information out there to people who are new to selling options. So this is my planning worksheet. I didn't have much expiring this week. The reason I have Google in yellow is because it's kind of had bad earnings yesterday, and it's come down quite a bit. I believe it's right around 90, 93, something like that. So you could actually pick up a put. You can probably lower this price by $5 or $10. So you could probably pick it up from pretty good premium, sell a put on it for around 75 is what I would currently look at with their poor earnings yesterday. Then you've also got, for recommendations, I forget what Fast is, but it's a good company. It has good financials, growing dividends, and it's a cash secure put that I'm suggesting. This is Walgreens WBA, again another good company. It's at all-time lows. I think it's like almost at a 5-year low, and the dividend is really good. And it's been growing dividends every year. So Google I've already talked about, and BBY is Best Buy. I really like Best Buy. I was going to go in for 5 minutes yesterday, and I spent probably 30 minutes in there walking around. I just really like Best Buy. And then the deltas on average were a little bit higher than 15, so almost like a 16 delta. So there again, keeping that delta low and taking a little bit less risk. And this has worked out really well for me. Lowering the delta to 15 versus 20 has been a godsend for me. The only trade I've done so far this week is rolling Coca-Cola, and this actually was 85% profitable at the time, and it wasn't expiring till June of next year, and I rolled it out to December. Did go to a slightly lower strike, so I lowered it from 75 to 70, mainly because Coke has gone down. Now it's come back up in the last couple of days, but I'd be more than happy to pick up Coca-Cola at $70. But I'm not sure it'll even reach 70. I mean, its all-time high is 67. And for that, I picked up $356 in premium. So that's my only trade this week. My guess is I'll do another trade, but I'm already really close to $3,000 in premium for the month. I am short for the $700 for the week, but again, if I do 1 or 2 more trades, I've more than reached my goal for the month. So I really like to, once I reach a goal, kind of slow down with trading, because sometimes you look too hard or you make it too complicated, and you might get yourself into a trade that's not the best trade. So And you never know, the market seems to change week by week. And I think we're currently, the last 2 weeks, we've been up a bit more than down. Before that, during early October and the end of September, I think we had more down days than up days. I think typically the market has 2 down days for every 3 up days, and I think that reversed during the bear market. I think it was more like down 3 days, up 2 days, or something along those lines. So these others, Micron, I did have Micron assigned to me, and I'm trying to decide what to do with it. I noticed it pays really good call premium, but I just don't know what's going to happen with the chip makers. So I need to dig a little bit deeper. I noticed they've recovered a little bit. I think they're down slightly today. So I may sell them outright, or I may just start selling options or cover calls on them. Um, Next is BKE, which is Buckle, and I've talked about Buckle in a number of other videos. They're getting ready to do that crazy dividend in December, so I may even buy 100 shares of them just so I can pick up that dividend. Um, or maybe do a cash secured put that's in the money and to pick them up automatically before the they go X date with that special dividend. So if you haven't seen that before or haven't heard about it, they usually pay a special dividend, and it's quite large. And a lot of times last couple of years they've done it in December. Like last year, I think it was as much as $5 or something along those lines. So I encourage you to take a look at it if you've never heard about BKE and you're looking for something to invest in that's a good company. Buckle is, Wrangler. It's they make jeans, and it's a well-run company, one of the best. So you can see not much with this planning worksheet this week, but typically I've had up to 14 or 15 here, and I color code things. I kind of manage it, and you can get a feel for what I like to do and what I don't like to do. And when I post it to my membership related to my trade, I usually have some commentary why I did the trade, why I didn't do something, maybe why I went farther out, why I didn't go farther out, and I try to provide a little bit more details so people can understand my trading strategies. So I hope you like this. Sorry if I've been coughing a little bit along the way. I'm chewing on a cough drop, unfortunately. I had COVID back in September. I had something like the flu in March, and then I got bronchitis in October. So it's trying to deal with my health this year, and hopefully I didn't cough a lot. I'll try to cut those out of the video so you don't have to deal with me coughing. So hope you have a wonderful day. I hope you come back. Thanks for joining me.